This is Street Smart. I'm Trish Regan. Welcome back, everyone, with financials soon to be in the earnings spotlight. Questions abound as to whether banks can grow revenue in 2012. Headwinds out of Europe, concerns about a slowdown in China, coupled with fears of more regulation, have bank investors on the sidelines. Can financials break out this year? Right now, with me, longtime banker, chairman, and founder of Evercore Partners, Roger Altman. Roger, thanks for coming in. It is great to see you, as always. So tell me your thoughts. I mean, we're starting to hear some positive things about the financial industry for 2012. Clearly, they've had a tough go of it, really going back to 2008. And the expectation is that maybe this year there might be a little bit more momentum. What do you think?
Well, first of all, as far as the great big banks are concerned, they're definitely healing. Their balance sheets are improved, their capital ratios are improved, their liquidity is improved, their risk-weighted assets are down, and so forth. And I think they're in actually somewhat better shape than the market may give them credit for. I mean, I'm not an investment strategist. Nobody would ask me my view on buying or selling. But I think just from a medium and longer term point of view, they've made a lot of progress. If you look, for example, at Bank of America, I think Bank of America is in better shape to some degree than the conventional wisdom. As far as the others are concerned, you really have to go case by case. I mean, is this going to be a good year for the equities of Goldman Sachs and Morgan Stanley and some of the others like that? I really have no idea, because the business climate for them and for our firm, for example, is reasonably good. But will it remain reasonably good? That depends a lot on Europe and whether Europe surmounts this problem or doesn't surmount it, and it depends obviously on the financial market environment.
Sure. Let me get to Europe in a second, but first let's talk a little bit about your business and some of the other banks' business that are within the M&A sector and the advisory role. I think we have a neat little chart that we can show everyone, and we can just look at the M&A activity over the last several years. Maybe not, but basically the trend, there you go, shows that we're seeing a little bit of a swing upwards. At least this momentum's continued since 2009. What's your expectation for M&A in 2012?
I think it should continue to be stronger, meaning the strengthening trend continue. The key factors that impact M&A are first and foremost business conditions, and as we can see from the latest data, they are improving. Secondly, interest rates and credit availability, both are pretty good now. Thirdly, our equity values rising, and for the moment, this moment we're sitting here, they are. And then finally, overall senior management confidence. Those factors are in pretty good shape at the moment, but we had a very volatile, we all know, financial market environment over the past 6 months. I noticed yesterday that the VIX was over 30 for more than 3 months of 2010, and that hasn't happened very often. 2011, excuse me. Yeah. So at this very instant, the elements for M&A are positive at this very instant. But we've had such a volatile environment, nobody can count on that necessarily for the whole year. Okay, Roger Altman, we are out of time. I apologize, but always good to talk to you. Thank you so much.